Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to continue the theme of looking for signs and signals that we have truly bottomed out and that we're leaving behind the brutal 13-month bear market that we've had all through 2022. And amongst the signs and signals, I'm going to have a look at one legendary signal which hasn't actually flashed for 4 years, and I'm going to show you exactly what it means. I'll also have a look at the 60-day cycle and to tell us exactly where we are and where it seems to be telling us where the Bitcoin price is heading. So if that sounds interesting, then you know exactly what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and join me for this epic technical analysis. Okay, before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. Please do your due diligence and do your wider research before you make any investment decisions. Okay, today I'm going to start off on the monthly chart here. So what is this legendary signal that we haven't had for 4 years? Well, I'm going to start off right at the beginning here, back in 2011, when we just had our first bear market. And that really set the stage to tell us in the future of when to realize that the bear market has ended. So there are two signals here on this chart, and that's going to be the theme all the way through until currently. So what we had here was a trend line from the top here at $32, $33 all the way down to where it bottomed out at approximately $2. And with this trend line, you can see clearly with the 8 EMA, the 8 exponential moving average, we crossed this trend line around about here. And that was really the first sign, which obviously at the time we didn't know, but now with hindsight, we can use that information and apply it to the current situation. So that was really the early sign that the market is about to do this. And the main sign here is that once this trend line is broken, which was this candle here, that was the sign that the market had bottomed out over here. And the confirmation of that was this legendary signal, which now with history, now we know, was to confirm this bottoming out process over here. And that confirmation was this candle over here, because this candle closed above the 8 EMA for the first time since the top over here. And if we look closely, you'll see that actually it crossed quite well. And this is the candle here. It's quite clear that this candle closed above the 8 EMA. And that candle seemed to have set off this big bull market run over here before the halving where this pink line is here. So these are the real stages. We bottom out, we cross the trend line, we go above the 8 EMA, and then we go on this big rally before the halving over here. And the question is, does this continue at the end of the next bear market that we get? So the next bear market that we get is when the price actually tops out in November 2013. And if we have a close look over here, we'll see exactly what develops. So once again, we get this trend line from the top all the way down through this, where we have lots of points we touch over here. And we have the 8 EMA, the legendary signal, which crosses over here. So that's the first signal we get that we're going to be bottoming out very shortly down here. The first candle that crosses the trend line is this one over here in June 2015. But the confirmation is this candle over here, which crosses over our now legendary signal, which is the 8 EMA over here. And if we have a look closely, this looks like it's just on the verge of it, but if you look closely, you can see that we closed quite well above the 8 EMA there. And once again, once we crossed over this candle, over the 8 EMA, that started a process of a rally right up to the halving once again over here. So once again, we got a bottoming out process, the trend line being broken. We got confirmation of that above the 8 EMA, and that triggered off a rally up to the halving. And that pattern at the end of the first cycle over here was exactly the same pattern that followed the first bear market that we got over here in 2011. And the question is, will it repeat once again? Well, at the end of the 2017 bull market over here, we can have another look exactly what happened. Once again, we've got our trend line, which topped out here at 20,000 in December 2017. The price kept coming up to this point here and getting rejected until we got this candle over here, which was the first sign that we're about to break out of that trend. And once again, before the breaking of the trend, the blue line, the 8 EMA, already crossed that trend over here. So the blue line crossed over the trend line first, we bottomed out over here, followed by a break of the trend line over here, and all we needed was confirmation of this legendary signal of the 8 EMA, where the price action breaks above it and closes above it on the monthly chart to give us the confirmation that this bear market has come to an end and we have already bottomed out. And as you can see with this candle, that was our confirmation that we have now bottomed out and left the bear market behind. And once again, the closing of this candle above the 8 EMA triggered off another bull run over here. And all that happened, although we got this COVID situation down here, we still closed well above our lows over here. And once again, that was up to the halving that we got in May 2020. So the whole process of the trend line being broken by the 8 EMA, which was the first sign that we're now going to be bottoming out and breaking the trend line over here, confirmed by the 8 EMA close of the monthly chart, followed by a trigger of a big rally, all before the halving. And that pattern repeated for the third time. And the question now is, has that pattern been repeating currently? Well, let's have a look at that. Okay, so we've now got the top of our last bull market was here at 69,000. We've got our trend line, this red line all the way down here. We've had a few points along the way, and this current monthly candle has now just closed outside of that trend line over here. And not only that, we've also had a confirmation of that candle closing above the 8 EMA, the blue line over here, at the same time as crossing over the trend line. And the question we have to ask ourselves is, although the blue line didn't actually cross over the trend line before this happened, that is the only difference we can see in this current cycle that was different from the previous cycles. So the legendary signal of this 8 EMA close on the monthly chart after a trend line of a bear market seems to be following exactly the same pattern as previously. Everyone has to make up their own mind how you want to interpret this. I would certainly interpret this as having shown you with many videos now of all the signs and all the signals of a bottoming out process over here on many different time frames. This legendary signal seems to have confirmed all that. So there's a lot of confluence. It's not just one or two or three, but there's a multiple signals that we've had over multiple time frames which are telling us the one same thing over and over again, that the higher degree of probability is that we've bottomed out over here, we've broken the downtrend of this bear market, and we are at the beginning over here, as the charts would suggest, of the next bull market run, and all before the halving over here. So let's see what develops. Everybody has to interpret that information in their own way, and always remember there are no guarantees or certainties in the market. There are just probabilities and possibilities. And those with a keen eye will be wondering, what are these figures about here? The 51, the 47, and the 47 here as well. Well, these are the months from one low over here to the next low of the cycle. So it took us 51 months from this low over here to reach the bottom of this bear market before we went into the next bull cycle run here. And similarly, it was 47 months when we bottomed out over here from this low from the previous bear market. And currently, so far at 15,400, it's taken 47 months once again from the previous low to the current low that we've got in this cycle. So once again, another sign, another signal that on a high degree of probability that we have actually bottomed out at 15,400. Okay, before I go on to the 60-day cycle, I want to just give you a few life-changing quotations which are very relevant in the context of the Bitcoin price action and the technical analysis I've just done for you. The first one I want to start off with is this one here, which is very relevant to all the people who were looking for a different narrative and who thought that the market hasn't bottomed out and are still in denial and maybe very stubborn about expecting the price to do something completely different to what the analysis would suggest. Now, obviously, the price can do anything and come back down to 15.4. Of course, anything can happen. But you have to ask yourself, what is the likelihood, what is the probability that we go down to 15,400? I would suggest less than 5%. So this quotation here is very relevant. So this quotation that at some point you just have to let go of what you thought should happen and live in what is actually happening. And this is the same in real life. When you actually relate it to the wider world in your own life, you'll notice that sometimes we can become stubborn in our own certain thinking, and then when we look back with hindsight, we realize that actually that we should really have been a little bit more flexible. And when new information becomes available, then you have to change your thoughts accordingly. And that brings me nicely to this quotation by Bruce Lee. And what he says is that, notice that the stiffest tree is most easily cracked, while the bamboo or willow survives by bending with the wind. So when there is no wind, the tree that is stiff is still okay and it will survive along with the bamboo or the willow. But when there's new information, when there's new wind, when there's a change of circumstance, the one who is stiff, i.e. here, the tree, that is the one that's going to be easily cracked, while the one that actually moves with the wind, the bamboo or the willow, will actually survive by adapting to the new information, the new circumstance. And this is an important lesson, not just for Bitcoin, but also in real life as well. Which brings me to the final quotation about flexibility and adapting to your new circumstance or new information. And that is a quotation by Rumi. I don't know if you've come across Rumi. He's got some wonderful quotations actually. And he's saying here that yesterday I was clever, so I wanted to change the world. But today I am wise, so I am changing myself. And that is really the whole nub of it. We all have to change ourselves, change our thinking in order to become bigger, better and wiser for our future. Okay, so I hope you found value in all these quotations. And if you did, then please do remember to like and subscribe if you haven't already done so. Okay, on to the 60-day cycle. So currently on this candle here, this red candle, from the start of the cycle back here, after we bottomed out after 51 days from the previous cycle, so currently we're on day 38 here. So far we made a right translated cycle because we've gone past the midway point and made a higher high from the previous point over here. And what we're waiting for is a resolution whether we're going to go back up to the $25,000 mark. So what we're really waiting for here is a topping out of this first half of the cycle before we can make our run into the low of the 60-day cycle and the start of the next cycle over here. The fact that we've had a massive run up over here, some consolidation, another run up here, some consolidation, and currently, if you look at the range over here, it's still at quite a high range, which tells you that there seems to be, with a good degree of probability, another run possible up here to the 25,000. So we're consolidating at the higher levels up here. And if we have a look at the 8 EMA on the daily chart here, we can see quite clearly we've been riding it all the way from here when we broke up at the beginning of this cycle. We've been just riding it, a free ride up on this 8 EMA train. And currently we've just lost it over here. So currently we're coming up to it and finding resistance on it. But if we put the 21 simple moving average, we can see that we are oscillating between the 8 EMA and the 21 simple moving average. And it often happens that when we lose the 8 EMA, it tends to find support on the 21. And if we do lose the 21, then at that point I would get a little bit worried that we're more than likely going to come back down and retest these levels here at 21,000. But until then, the narrative still seems to be the same, and until the narrative breaks, we have to go with what the charts are telling us here. So my expectation is that we bounce back up from the 21, recapture the 8 EMA for the next run up to the 25,000 before we have a 60-day low over here. One thing I want to bring to your attention, which is very important, is that while this is the potential end of the 60-day cycle over here, just like as I was mentioning that when this topped out at this point and it was coming down and we were expecting the price to come lower than the 15.4 over here, I said to you at the time that if it doesn't do that and it actually starts to go sideways and then starts to go up instead, that would be a very strong signal that the 15.4 is in and that we are now going to be going on a bull run over here. And this is exactly what could easily happen, that while we're waiting for a 60-day cycle low over here, the price may just go sideways for many days, and as we approach the 60-day, we may well start rising again, just like we did over here. Now that would be incredibly bullish, because it's basically bypassing a cycle low, and instead of the low being much lower down here at around about 21.4 or even lower, what we will have made is a low again, and going into the potential 60-day low on a higher note, and that would trigger a lot of buyers to come into the market to try and push this higher towards the 30,000. Okay, so we'll leave it there. I hope you found value in the video, and if you did, then please do remember to like and subscribe and to turn on the notification bell. And if you have any comments, questions or suggestions, then leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.